Hi there, traders. This is Brad Goodwood with the Daily Market Insight for Monday, the 9th of October. All right, the news out of Israel, Palestine, right, dominating the news as you'd expect. Right, a huge amount of carnage. Obviously, oil had a big move. It was a $3 bounce on the open, and that's going to sort of disrupt things somewhat. Right now, and what happens with these situations is the markets open up very tentatively. They've got to sort of try and work out, piece together what is impacted. Obviously, oil being one of the major things. But and as we go through, you'll see as things reconnect, there's a few little gaps here and there, but nothing dramatic just at the moment. Now, outside of that, the US jobless data, right, a little bit mixed on Friday. Okay, a little bit of a blowout in the unemployment rate. Average earnings not quite as strong, but a bigger job uptick, right? And that's, if anything, talk about the volatility around the non-farm payrolls. It's chaotic, right? And it took some time for the bond market to really move. If anything, the US Treasuries, right, are keeping the dollar afloat, and this is where the action is. So if you're looking for to see what the dollar's doing, just keep an eye on the US Treasuries because they are still very robust and keeping the dollar afloat. Now, with the international sort of events in Israel, Palestine, I'm not here to take sides. I just think it's chaotic and terrible for the people involved. We are seeing a major risk-off day. Now, are we seeing that across the currencies? Well, we are seeing Euro, Sterling, Aussie, Kiwi down, but there's a number of other instruments which are also going down. So the dollar's not necessarily consistent. We do have the risk-off profile, as I was saying, Euro, Sterling, Aussie, Kiwi down. The dollar, well, it's a bit mixed against a whole basket of other currencies there as well. So it's not an easy situation to be gauging at this point. If you are looking at the commodities, well, there's some decent moves here across the board. You probably see some. Well, I was just having a look across the board. Let me just show you, like, where you're looking for what happens in these events, right? It is a regional event, but does it impact the safe havens, etc.? Now, if I just come back and look at the global markets, right? The dollar index, well, after non-farm payrolls and everything else, it's still above this trend line, coming in around the high 105s. Euro, a little bit of a short-term pop-up there against a resistance trend line. Or gold has sort of bounced aggressively, right? This is one way you can sort of see what's happening with the safe haven. So a bit of a rush into gold. You can see the gap here on oil, at least $2 or $3. It's sort of gap now. It's sort of stabilizing around this resistance line. This is going to be good for the cryptos, right? Any sort of safe haven play, there's always cash going into it. Doesn't look like it's been dramatic, but it is sort of there. And you see the price action here after Friday's non-farm payrolls. Big bounce back up in equities, probably on the weaker unemployment rate. And then as the bonds started to rally, they've probably drifted back down, right? So it's like we got two major things here: an international geopolitical event, and then mixed non-farm payrolls. And the markets, traders globally are trying to sort of put these into their calculators to work out, do we keep buying dollars or not, right? The key to it is this week's data, right? We've got the key US CPI numbers coming out. So you wind this back and just have a look at the major currencies. Okay, the dollar still in an uptrend at the moment, although it does look like it's stalling. Now, dollar yen is still going up. We had the BOJ come out and sort of redefine their intervention sort of rules. We saw that big clean out on the downside. It breached 150. And this is what you get. You get speculative selling. And if you're an aggressive fund manager, you come out and hit it as soon as it hits 150. It looks like and smells like the BOJ, but it wasn't, right? So it's back to where it was. But that's a sort of crazy, chaotic price action you're going to expect if the BOJ do come in at some point. Now, Canadian unemployment numbers, really good employment uptick. I think it was 3 times the number expected. So the CAD has rallied, right? And that's where it is at this point. And that sort of moves, dollar CAD moving down goes with the higher oil price that we saw this morning. So euro, sterling, Aussie and Kiwi still down. Like, just you got to be aware, Aussie and Kiwi are just out of sync at the moment with euro and sterling. If anything, sterling's the one instrument that has sort of come back more so than the others. But we're all set, right? We're all set for if we see a significant event where either dollar weakness or dollar strength, we are going to see some good moves. And in particular, dollar weakness is what we want, right? Because you'll see clean outs in the dollar pairs to the downside. It'll help the BOJ out. Dollar CAD will keep going down, especially with the strong Canadian numbers. And then we get a chance to get into euro, sterling, Aussie, and Kiwi, right? If these things if the dollar just keeps going up, right, these things are moving lower, but it's the price action isn't as good. We don't have as good technical levels, etc. So to me, the best outcome is weaker CPI numbers. Now, before the CPI, let's just have a quick look through. Now, I've got the calendar here set for the sort of top tier and second tier numbers. Not much today. You got a few Fed speakers, but most of the world is looking at the impact from the attacks on Israel. You look at Tuesday's data. Yeah, there's some consumer confidence numbers there out of Westpac. They're nothing major. Same with the NAB. But, sentiment numbers, as we've seen over the last 6 months, have been important. Once again, another bunch of Fed lunatics coming out and talking there. You come into Wednesday, this is where things are going to get very interesting, right? Because if I can just get the mouse off that. The Wednesday, Thursday, this is where the week really starts. Okay, you've got the US PPI numbers, the first sort of inflation numbers. We've got German inflation there as well, FOMC minutes. And then you come into Thursday, right? This Thursday's got to be a big day. So if you wanted to blank out a day for potential trading, Thursday, European, North American session would be it. UK GDP numbers, industrial production, manufacturing production. Well, these are all big, solid numbers here for sterling. Sterling is making a comeback, so we want to keep an eye on these numbers. But this is the go-to, right? The inflation numbers out of the US will determine a big portion of what the Fed could potentially be doing, either sitting on the sidelines or potentially looking to raise rates going into the end of the year, right? So and that's got to be your focus, right? As a trader, you're looking for the key event that's going to shape global markets. Well, it's the core inflation numbers out of the US that's going to do it, right? And then you come into because once we get this could shape the markets for the next 2 or 3 weeks. And then you come down, we've got the weekly sort of jobless numbers, which, you know what, it is sort of coming in and impacting various things. Chinese inflation numbers, important for the Aussie Kiwi. And that's pretty much it. The University of Michigan consumer sentiment numbers, the prelim numbers, always worth having a look at. It's the last sort of stop before the weekend. So this week, right, it's tricky because we have to just keep an eye on what's happening, the impact from the Israeli-Palestine situation. A lot of governments are already supporting Israel politically. Now, there's a whole trail of where all this carnage has come from. You can read that as much as you like. But when we are looking at the global markets, it's our job to focus on where the easiest trades are, okay? And looking at the global currency markets, the US dollar relative strength, this is what I was saying, like the dollar's going up against a bunch of pairs, but then going down, well, the safe havens, okay, they're in play. You can sort of see that very clearly. Swiss and yen, we saw stronger Canadian numbers. So, okay, it makes sense. The Canadian dollar's working well. And Norway, well, maybe a bit of an oil trade there as well. So then you look through, the euro's going down against, obviously against the safe havens. And the safe havens are rocking against most of these instruments, right? Except the yen. Obviously, the yen and the Swiss are the safe havens in this situation, and strong Canadian numbers. So out of all the currency moves that we are seeing, it matches up with what is happening. Stronger Canadian numbers Friday. Swiss, they're buying yen against everything. Safe haven trade in play at the moment, right? Now, from what Israel's saying, they aren't going to be sort of pulling out of anything in the short term. So, you know what, this may be a bit longer term, but I tell you what, by the end of the week, the market will become desensitized to this issue. and it'll settle down. So just be aware, if you are looking at the safe havens, you'd probably expect them to be in play Monday, Tuesday, Wednesday. See what happens. See if there's any more flare-ups. See what else happens. And then you might see a bit of an unwinding of those trades as we go through that part of the week. Now, you really, to me, as a trader, like, I don't like to see, like, geopolitical events are a nightmare for us, right? Because the markets lose, like, traders and the global markets lose focus on what's happening fundamentally. On a week where we have a defining situation with US inflation numbers, I hope things settle down by Thursday, because this is the main game, right? And if there's a geopolitical event disrupting the global markets, well, we are going to lose a major trading opportunity around this, right? So that's where the things all merge together. So just go through your calendars, work out where the key events are. Of course, if I go back to including the low impacting numbers, okay, there's a huge amount of data coming out, right? I just filter it by sort of, I don't just look at the top tier. I like to look at the 2 top tier sort of releases, so I can get a bit of an aspect of what is going on. And then you can come back, focus on an individual perspective, what's happening and what's coming out during each day. Like today, fundamentals, there's not many coming out. And I think if anything, the markets will be looking at the Middle East and trying to work out what's going on. Of course, the safe havens are in play. What does it do for equity markets? Well, let's just see how it goes. At the moment, the most of the US equity futures are down, and that's putting a deflated situation across the global equity markets, right? So these are down. Well, actually, the Aussie and Kiwi are sort of hanging in there, or Kiwi's down, Aussies are up. And we'll see how the European markets go with that as well. You think they'll be rolling back as well. And that's all we've got, guys. So to me, Treasury's key. This is where the CPI numbers come into play, right? The CPI, very important for the Treasuries. Actually, Wednesday's US PPI numbers, probably the first sort of numbers we'll get to sort of see what's happening there. And then we can start to piece together where the trading opportunities are. All right. Okay, guys, a bit of a tricky one, but we'll see how this could settle down very quickly. And I've been doing this for a long time, and the market, I can tell you, it's a little bit, you might think, sort of unsensitive, but the market has seen these global events 1,000 times over, right? So traders become very desensitized. If there's no more carnage, then they will jump into the markets and go where the fundamentals are telling them. And this week, it's the US CPI numbers that are key for the global markets. All right, guys, have a good one. All the best. Cheerio.